Hi, hey Facebook world. How is everyone doing this wonderful Friday evening? Hope everyone's getting ready for the weekend. Gosh, this weather, can I tell you, it is so beautiful here in Richmond, Virginia. Absolutely loving it, loving it. Hope you guys are all going out and enjoying your weekend and today. Um, Speaking of today, today is May 10th, 2019. And my name, for those of you who don't know me or are just catching this for the first time, is Kash, and I am an accounting consultant attempting to bridge the gap between CPAs and small business owners. And one of the ways I am attempting to do that in 2019 is to come on live every single day with a tip, a tidbit, or some food for thought. I am on day 130, which is awesome. I think it's awesome. And today is Friday, and usually the theme for Fridays is Featured Friday, where we talk about in length and really kind of dig deep into one particular topic, or I bring somebody on to give you guys some more information about a particular topic. But today we're actually just wrapping up our Accounting 101 Lesson 2 plan. We've been talking about liabilities for pretty much the last 2 weeks. And because it's just such a very large topic and a topic that actually a lot of small business owners sometimes get confused about, I wanted to come on today just to kind of make a recap live, just to cover the last 2 weeks. I know I went through things very, very fast. So I just wanted to take a moment and say, okay, you know what? Here's the crux of everything that we've talked about for the last 2 weeks. Ultimately, liabilities equals assets minus owner's equity. That is the accounting equation to make everything balance, because your liabilities, just like your owner's equity and your assets, are found on your balance sheet, not on your profit and loss statement. And basically, what does liabilities mean? Liabilities, very simply, means funds that you owe someone. You owe somebody some money for some reason, right? Some of the categories of liabilities are credit cards, notes payable, accounts payable, so bills that you know that you need to pay within the next 30, 60, 90 days, mortgages, car loans, personal loans. Other ones are withholding, tax withholding, I should have put that there. But tax withholding, whether it's for yourself or for your employees, or any other types of withholding, if you have a 401k plan that you're collecting funds from your employees on their behalf in order to invest into a 401k plan, those, until you actually make that transfer, should be sitting in your liabilities categories, okay? So speaking of making payments on your liabilities, keep in mind that the principal portion of your payments are not tax deductible. They are not expenses. Your interest can be tax deductible and can be listed as an expense, but there are limits. So make sure you know the new limits for the 2019 and forward tax law changes, okay? There's a live on that. And lastly, the funds that are received, this is the one that I get the most questions of, and this is the one that I see the most happen on small business owners' books and records, is when they do go out to get a loan, they receive the money and they accidentally, because they never do it on purpose, accidentally categorize the funds from the loan as income. Hi, Elizabeth. Thank you so much for joining. And they're not, right? So funds that are received from a loan are not, that's not income, and that's not taxable at all. So you don't get taxed on $100,000 that came into your bank that you have a loan out for from a bank, right? So just keep all that in mind. Keep in mind that your principal is not deductible, only the interest is. And when you receive the funds, do not put it into your income account. Put it into the appropriate liabilities account. Hey, Elizabeth. So this is not something I generally do, but since you're on and we're doing kind of like a featured Friday, kind of a little bit of a recap here of our liabilities, and you're a small business owner, do you have any questions about liabilities, about getting loans, or about how to? I know this is silly, but not silly, but just kind of wanted to give you an opportunity if you had any particular questions about liabilities. I'd love to answer them for you. I know Facebook has a delay, and apparently I really don't like dead air. I need to be comfortable with that. And if you don't, that's okay. I didn't want to put you on the spot. I just thought I'd give an opportunity, because liabilities can kind of get a little confusing sometimes. Not as straightforward as income or expenses. Actually, apparently expenses aren't moving up. Having massive squirrel moments all by myself here. That makes sense. Yeah. So that's good, right? That means you didn't really need the funds just yet. Are you leveraging credit cards maybe? Sorry. I know it's really dry material, right? Like it's just liabilities. But thank you very much for joining me today. I appreciate it. I hope you're having a wonderful Friday. And if you do have any questions that pop up, if you are really thinking about getting a loan, let me know, and we can talk more about some of those different options, right? And figure out what works best. But thank you for joining me. Hope you're having a wonderful day. But yes, credit cards. Yeah. Credit cards are pretty much like the big liability that most people have, I think, because it's a great way to earn credit, right? And obviously, we should use our credit cards wisely, make sure that we're making all of our payments, not just our minimum payments. But anywho, I appreciate you. I'm going to go ahead and jump off and go grab some dinner with the fam and have a good night. All right, y'all. Thank you again, Elizabeth. I really appreciate it. And I will see you guys soon. Bye.